right, welcome to week 7, lucky number 7. A lot of good things to talk about this week. So if you're tuning in, grab your favorite beverage and happy Sunday. Michael and I have some interesting things to share with you. But first, don't forget to like, share, set an alarm, set an alert, subscribe, tell your friends. We're going to try and give you some macro ideas here. We're recording on a Friday. There's still a few hours left in the market. We'll talk about that. But we're going to try and give you, as usual, some actionable ideas for what's coming up on the following week in the market, which is going to be April 8th. Spooky eclipse day. Michael's going to be in the complete dark up there. And by the way, I'm wearing Michael's attire just in tribute with his
Honorary
soon-to-be
Canadian
fatherhood.
today.
Honorary Canadian fatherhood to be. So I'll take it away, Michael.
Absolutely. So yeah, everything we got a kind of a theme today, and it's all based around not that one. That's you. It's all based around this article that Steve saw right here, where the Fed is talking about their 2% inflation, and it was one of the Fed guys that caused the sell off yesterday. I can't keep track of them all. I couldn't pay me to do it, but essentially this time article just goes, and it's kind of just a made up number. Why they picked 2% and for what reason, and yeah, we're gonna stick at 2% and everything's going fine. But Steve and myself, following the charts, and that's why we're going behind the headlines and onto the charts, is we're trying to figure out what does the market actually think. We don't care what this Fed guy thinks about what he wants inflation to be, because he's only got one lever to pull, right? It's like, do you want to trust that guy, or do you want to trust what we're going to talk about, the bond and the commodity market? So let's pop over to your screen, Steve, and you can get people talking about what we actually think is going to happen with inflation over the next little bit here.
Sure. Well, actually, you caught me cycling through some charts, and I actually stopped on TLT. I will preface this by saying, in no means am I whatsoever to be considered a bond expert or knowledgeable in any way of bonds. I know a couple of key words. Inverted yield curve, I know is bad. I know things like that. But what I do know is higher interest rates, not good. Markets don't like that. That tends to create chaos and strife. And I know that when prices of bonds go down, inversely, the rates go up. So when we look at a chart here like TLT, which is the 20-year Treasury Bond Fund ETF, it's telling me it is just being absolutely hammered every time. The 200-day, now you got the 50-day lining up, and the 20. They're just like creating a brick wall of technical resistance above. And we kind of creep lower, pop back up into the armpit, as I call it. But we've got our fast moving averages starting to curl over and show some definitive break from this, again, just this solid line. What does that mean? Well, again, like I said, lower prices portends higher interest rates. So the Fed can talk about their 2% interest rate target headlines all they want, but with time actually calling bullshit on their headlines, that's rather interesting. And I found that extremely fascinating. And when you marry that up with the chart, we've even got like a little rollover here. Again, we've got a few hours left in the day before the weekend, but that is what the higher interest rate fear mongers do not want to be seeing.
Yeah, and I think it's important to just to kind of point out that the the bond market, a lot of people don't know this, but the bond market is way bigger than the stock market, and the people who work in the bond market are doing, way more than they are in the stock market. So I think the bond market is like 10 times the size of the overall stock market. And the stock market gets more headlines because it's more interesting. But the bond market is really where you've got a lot of the biggest quants and the PhD nerds and all that stuff. So I agree here with Steve that the whatever they're going to say for rates or inflation or whatever, the bond market's calling BS on that, right? If the bond market is moving lower, that means they think rates are moving higher. And just by that nature, I'm going to trust the traders in the bond market over what the people say. And not only the bond market, but if we go over to my screen here, we can take a look. So I had bonds up here, but if we take a look at one of my favorite ETFs, which is DBC, and DBC is a commodity ETF, and this kind of has a little bit of a little bit of gold, a little bit of oil, a little bit of wheat. Jim Rogers, who is a famous hedge fund manager, always said, if you drop it on your foot and it hurts, that's kind of commodities. That's what's in this ETF. And if we look at what's happening this week, that's a nice solid kind of breakout candle. And I look at this, I've heard this. You can call this a bear trap. I've heard people say a scoop and score. I've heard, an undercut and rally, whatever you want to call it. We had a whole lot of support going on here for the longest time. And then we broke that support and we spent weeks and weeks and weeks under it just to rally back up. When I look at a chart like that, I think there's a whole lot of shorts maybe caught. There's a whole lot of people betting that inflation was over and all of these commodities were going to continue to trend back down. And that just kind of rallied through. And I want to bring over here too. We have these picture in picture charts, which I love, that can always give us a longer term view because they're line charts. And line charts do a really good job of zooming out. So you can see that almost a little bit more on this daily line chart where here's a very clear support area. We spend some time under that. We rally back up through. Everybody who got stopped at a long position is sad. Everybody who entered a short position is sad. So I don't know how long this kind of shift out of commodities or out of technology into commodities is going to take place. But this is the power, I think, of something like Trade Ideas where we don't care what's going up, right? We just want to be involved in it. And Steve, I see you over there bringing up the semiconductors. So let's actually go and take a look at that.
Yeah.
Yeah.
Well, you said technology, and that was the key word. I could have brought up the cues, but that's redundant. Some of you will notice I'm using moving averages on my charts, and Michael isn't, which is a great combination.
Yeah.
He's looking at price levels and bigger picture. I'm looking at more granular indicators that kind of help my eyeball accumulate or understand where we are. And again, we're kind of here in this armpit. So we're looking at a daily chart, by the way, of the semiconductor ETF, which has been the leadership. And that's why I brought up the semis. They have been the leadership, just NVIDIA, AMD. I'll shift to a couple of those charts. But in the bigger picture here, we don't want to spend too many more days under this 20. I refer to the 10 as my momentum indicator. And when the momentum indicator breaks down, the 20 is always there as the backstop. But when the backstop fails, and it will eventually, it always does, we start to see closing prices under this red 20 and it's starting to roll over. So, if you're long and strong semis, the longer we stay under this little armpit here, we have pressure from above. Now, that's the bigger picture. Let's take a look at a couple of darlings, shall we? The AMD chart to
Just
me,
one
I
second.
was,
Just go back to that
uh-huh,
SMH for a second. Well, I think
yeah,
so.
yeah.
While Steve's clicking through these, pay attention actually right above my head right here. So this again is the picture in picture chart that I talked about, and he has a monthly chart up here, and you can see SMH just to show you the return. So when we're saying we're seeing a rotation into and out of one thing or another, there's a lot that semiconductors can fall, showing a like 400% gain here right now. And that's still just a profit taking rally. So, we've talked about this before, but say you were a fund manager and all of a sudden you look up one day and you own NVIDIA, and now NVIDIA is 30% of your hedge fund. Well, you can't hold all of that because no investor is going to pay you just to sit there and hold NVIDIA as basically your entire fund. So you got to sell some of this. When you see something going this crazy, they have to sell some of this. And in bull markets, people sell stuff and then they buy other stuff with it. So when we talk about rotation, when we talk about upcoming kind of sectors that we're looking at, we're basically saying if they start selling this, where does this money go? And I just know that you're going to go to AMD next, and that number looks even crazier.
So, we talked just a few weeks ago,
Yeah.
Michael, about insider selling, didn't we?
Yep.
We talked about how, usually when the markets are doing really well, we were talking back here about a lot of insider selling. And since then, I love this chart because Brian Shannon, the 50-day moving average is the general bill of health. He will
Hmm.
always get forever credited with that. And it's a great way of looking at charts. We've got numerous days hanging out at a level of interest. And all of a sudden, it seems that yesterday gave way. Something broke yesterday. Again, we're on a midday call here. We don't know how the market's going to close. But this was an ominous sign. And AMD being a leader with 1,200%, I know Michael's itching to call out that number,
Yeah.
is just, you're just begging to be yelled at and scorned if you're a money manager and you're not paying yourself. One more before I give it back to Michael's desk, of course, is the darling NVIDIA, up almost 2,000% in the period of this monthly juggernaut since 2018. Basically, all of our data is compressed here into one easy view. Same situation going on over there. We have given way. The backstop held here, the backstop held here, the backstop held here, but we broke. We are now on the other side of the mountain, and the moving averages are rolling over and pressing down, no longer supportive. They are now restrictive. And this is not a technical good look. You can read all the headlines you want. Kramer can bang on as many buttons as he wants and tell you why he loves the CEO of NVIDIA at 1900. The guy's a great CEO, visionary, but 1900, it's time to take some profits. So, technically speaking, I'll leave it at that. We are starting to throw some shots across the bow.
Yeah, and I want to highlight that candle that Steve was talking about yesterday and go through some things. So we've been, the two of us on this podcast, been all over gold for a while. And if we take a look at that AMD chart, let me just bring it up one more time just to contrast. Okay, you don't need to be a CMT to know, at least over the last little bit, this has been in a downtrend, right? It's moving lower. And then just take the same time frame, and we'll click on GLD here, and it's moving higher. So the idea, it's not complicated. Large institutions, they don't have the ability we do of, I'm going to buy some gold and just hit a button and then buy some gold and the market doesn't move. Or I'm going to sell my NVIDIA and I hit a button and I sell my NVIDIA. They need days or weeks or months to get into and out of positions, and they're going to push markets one way or the other, right? I hate to break it to Wall Street bets, but it's not retail that controls the markets. It's the pension funds. It's the large institutions. These are going to move the market. So when you start to see these rotations, there's cues, and that's what we're talking about here, where everybody made a whole bunch of money owning Nvidia right here. And as soon as it gets talked about all the time on every news program, on everything out there, you better believe that there's large institutions that are looking at this and saying, we've got to take some profits. As an institution, the only people I can sell to is retail. There's retail and institutions. So as institutions are getting really frothy on these names, I'm going to sell some of my position and then I'm going to rotate into it. And it's our job as traders not to try to predict, hey, I think this is going to be the greatest company in the world and I'm going to buy it when it's falling apart. Our job is just to say, what do I think the institutions are going to start buying? And how do I position myself so I can be in those particular names at the time? And, I think this gold AMD look is a perfect look because it just shows they're moving out of stuff, but they're not moving to cash, right? They're moving into other names. You take a look at OIH, which is another ETF. This is the Oil Services ETF. Just an absolute straight line up. That yesterday candle that ruined, if I go to DBC, that yesterday candle that was really, really bad. We showed it here on the semiconductors. It looked really bad on the S&P 500 as well. But we take a look at this DBC, or this commodities ETF. We were up that day, right? So we were up yesterday and we're moving up higher today, just showing again that kind of relative strength nature. Do we lose you? Do we got you, Steve? You're here. Okay, perfect. You're muted, I think.
Little hiccup.
Oh, it's a robot. You're all right. I can see you now.
Little hiccup. We had a little hiccup.
Yeah, we're all good though.
Yep.
All right.
I hope.
Nope. I see you. You see me? I can edit that bit out.
Yeah. Okay. Well, I had a little hiccup, so hopefully, what's going on. All right. So I'll come back in here. I'll pick it up in 3, 2, 1. So I think the synopsis here today is what Michael and I are saying are stocks. Be cautious. Commodities still look positive.
Mm-hmm.
And looking at the S&P, our biggest average weighted ETF composite, which is going to put in financials and tech and all of that retail stuff. Same story, giant engulfing candle. You just can't ignore that. Again, nice green. We don't know where we are. We're in the midday of Friday. Sunday will tell where this actual candle or this chart closes, but I went to cash. I'm in 85% cash now after yesterday. It's been a lovely run. And
Yes.
when I see a engulfing candle, I've been around long enough to know that these can portend, you know, like the old saying goes, sailors, what's that saying? Red skies at night, sailors delight. Well, red skies in morning,
Hmm.
sailors take warning. Just throwing that out there, and it caught my attention. So nothing wrong with pulling back and going to cash and seeing what that's all about, and where we go from there. But our gold miner call, our GDX call, still looks pretty darn good over the last 3 weeks, Michael.
Yeah, and even if, there's not any kind of impending crash or anything, but even if we're just going to chop here on the S&P 500 for a long time, if the commodities do well, that's great anyway, right? That's all we need is shift into something else. And so with all this commodity talk and how we think there may be a rotation into commodity, I thought I'd bring you guys a trade that is something that I'm interested in. As Steve mentioned, we're kind of halfway through the day here, so we have no idea how this is going to close. But I like the look of this XPO, and how I found it was from my favorite scan, which I'm obviously very biased about, but that is TI strength. And this is a relative strength algo. Essentially just looks for whatever stock is trending the best at any given time, and then it takes points away if that stock is overextended. We've have some back tests on this showing that it works in the long run. And this XPO, you can see right here, is actually number one on the list right now. And I like it because right up here, I always have this kind of buried, this tab buried, where you can read all about the company and everything. But this is essentially a trucking company. So this, has to do with moving stuff around. So the idea is that if stuff, as opposed to kind of software, is going to be the thing that's going to move over the next little bit, then my theory is maybe, and maybe this is what the TI Strength algo is showing us as well, that the trucks that move stuff is going to do do nicely as well. And you can see we're up here, this nice kind of ascending triangle or whatever it is you want to call it, is holding really nice and tight, and we are butting right up against this high, and that's around $128 a share, give or take. So I'm looking to see if we can get a close through that area. That's where I'm interested in. Worst case scenario, you got to go if this kind of 117 gives loose. But for me, if we kind of got to close back inside this range, I would be out of this position. But that's kind of one thing that I'm going to watch for next week. And you can see I've got my little price alert here, so it's all set and ready to go. Now, we've done a lot of talking about relative strength and things that are moving very strongly from a daily point of view, a swing trading point of view, what we think could happen over the next week or number of weeks. But I wanted to show this new channel bar that we built for you guys who are day traders and you want the same kind of concepts from a day trading point of view. One thing that's great about trading and technical analysis is it's what they call fractal, which means same thing that works on a monthly chart should work on a daily chart, should work on a 5-minute chart. 1 minute maybe you're getting into a little bit of HFT kind of nonsense, but this layout that we kind of put together recently is based off this kind of craze that we have. And I did a video on it, and a lot of people did a video on it, of opening range breakouts. There was this big study done by actually a friend of Trade Ideas, Andrew Aziz, who did this study with, I'm going to butcher their name, but it's Consarium Research. And they basically went back to 2016 or so and tested this idea of what happens if you just buy or you short opening range breakouts on stocks that are doing a lot of relative volume. So, of course, when I read this study, I was like, well, holy crap. We are probably the only scanner out there that has real-time relative volume calculations, not end of day like a lot of them, and we can show you when things are breaking their opening range in real time. And I made the video on that. Our CEO saw the video and he made this channel and wanted us to show it to you guys, where everything that you're seeing here is going to be things that have broken their opening range break or are breaking. So, for example, if I go down here to this scan that's under the chart, this is going to print every time a new opening range break occurs. Now, Again, we're in the middle of the day. A lot of this would have already taken place, but it's signaling you when this happens. So right here on this candle, the 60-minute or the first hour opening range break occurred, and you can see it popped up right here at $2.23. Stock's now at $2.99, so that's already a good trade. Now down to what these other scans are showing you. This one here, this heat map, is just showing you names that are doing very well and they're in the high end of that range. So that means they've already done their opening range break and they're holding really strong. If you want to look for kind of momentum after the opening range break, and right here, you're seeing the same thing. This is a little bit more real time in nature. We call it a stock range. Again, it's just showing this relative strength concept that me and Steve have been talking about the entire podcast, but showing it for a shorter term time frame. Did I cover everything there, Steve? You think?
Well, pretty much. I mean, I would just finish up by saying if you're going to be joining our cash trading tournament, and we're calling it Cashola, the reason we're doing that is we're trying to pull people down and downshift into a more position trading portfolio rather than come in, find what the hot stock is with a wide spread, and gamify it back and forth. So, with that said, we've got a few rules this coming one. And, as we do these every month, some might be different. You recall one was a short only tournament.
Yep.
But in this case, we're trying to slow things way down. And in that interest, a couple things. One, there's going to be no pre market trading. All right.
Yes.
I'm going to say that again. No pre market trading. I'm sorry if some of you are yelling at your screen right now, but that's by design. It's just the way it is. Um, you're going to trade regular hours, and the regular
And
hours are also going to be confined to the last thing is just you can't trade the same symbol more than 3 times
right.
round trip in one day. We're doing this to try and get rid of the gamification of pre-market wide spreads and finding something that you can just continue to milk. We want
Right.
you to look around and trade the market at least 10 different round trips of different symbols over the course of the tournament.
Yeah. So the and Steve nailed the idea there. The concept is just that the other tournaments, and we may go back to these tournaments as well, are were very good for short term traders, very short term traders who were looking to get in, looking to get out. They found that stock of the day, and they were just right scalping in and out, in and out, in and out. What we want to do is we want to kind of force people, and this is what we're doing with all of the contests. As Steve said, the one contest was forcing people to short, and we got really good feedback from that, where people were basically saying, I had no idea how to short. So I had to make up a shorting strategy. I had to paper trade. I had to implement it in the market. And, I learned something. If you watch on the channel, actually, the interview that's before this podcast will come out with the winner, he said the same thing. He said, I was struggling forever. And one of the things that this contest did is it pushed me in a direction that I never thought I would go. I never thought I would short. The interview that's coming out next week with Lazar is from a guy who only shorts. And then before then, we had a long only competition where, I know some of the guys who short only struggled with that. So, what we're always trying to do is we're trying to push people into kind of new avenues of trading, out of your comfort zone, trying to get you doing things that you may not normally do. So, this content, as Steve mentioned, no pre-market trading. And the reason for that again is we don't want people buying and selling that kind of high flyer 17 times starting at the pre-market and ending at what is it like 4 a.m. Eastern and ending at 8 p.m. Eastern and just in and out of this thing all day. So we've also limited, just to repeat, 3 round trips per symbol per day. So what the point of this and what the hope of this is that it's going to force you to be very, very selective. You got to take your shot, right? This is not what I guess a military analogy would be. The other contests were like a machine gun approach. You could just shoot at everything, with many, many small bets all over it, but you can't do that anymore. So this is going to be kind of a sniper approach. You got to find your stock. You got to wait for your shot. You got to take it, because I guarantee you the people who are going to win with these new rules are the ones that find that thing that's moving today, right? I showed a couple that's CADL that's up 65%. So that's what we're trying to push you to with this one, is that focus on the big swing, not, taking a penny here, taking a penny there.
There's just no substitute for simulated trading. And what we've got here is the Trade Ideas paper trading module. This is going
Yes.
to be something you're going to be very familiar with. Wait till you see what we're building out for the web. I'm not even going to show you the old clunky version because we are literally close to transforming the user interface for web. So you no longer, I'm not even going to get into specifics. We're going to surprise you. You're going to really
Mhm.
like what you see. But the point being, even going back to one of the interviews, you said the guy who was said, I never used stops, but this forced me to start using stops, and it got me doing something that was a good habit. And he did that by simulating. So the TI paper trading module is your main tool during these competitions, and we're forcing you to try things that you haven't done. If you want to game the spread, there's great tournaments of competitions for
Yes.
gamers. If you want to just
Yeah.
go crazy with your speed and agility for 9 hours, that's great. We're trying to help you select, build a portfolio, cull that portfolio, weed that garden, and make that portfolio grow. We're doing it for your own good.
Yes. Well, and me and Steve both talked about our prop firm experience before, and that's something that a prop firm will do a lot. If they see you taking loss after loss after loss on a single symbol, they'll kind of tap you on the shoulder and say, "Get out of here." So again, this one you gotta just only tip I can give is that we're forcing patience on this one, right? You can't just be in there just in and out, in and out, in and out all day. Is really hone your scans before, and we're giving you what 3 weeks or so prep on this to right hone your scans, try to figure out how am I going to get a couple of the big hits. The reason I showed that opening range breakout layout is A, it's new and we think you guys should see it and that's cool. But B, I think that's going to be my focus because if I've only got a couple kicks at the can for each symbol, I think something like an opening range breakout play may be a way to do it because, yeah, the person or the people who are going to win this is going to be one who is a better stock picker as opposed to a better trader. I don't think the specific entry is going to matter as much as previous competitions. It's going to be picking the name that has that kind of all day trend. That's going to be the goal, I think.
Well, as far as I know, the date of the official start date is the 23rd of April, but I think you have a few days prior to that. You'll be seeing some marketing material on how to sign up and get in and play around, turn on the TI paper trader, and start getting familiar. Open up that channel that Michael showed you. Get familiar with where the action is each day. That's what Trade Ideas is going to do. It's going to bring the action to you. It's going to allow you a tool to play the action and give you feedback in a subjective way that everybody can get better in their own way.
Awesome. Well, Steve, I think that's going to be it for this one. I think that was a great podcast. A lot of shifts happening in the market for I'm for one exciting because just having Nvidia go up every day, it's just boring. So I'm glad that we're seeing some kind of stick
Rotation.
and move and rotation and allows me to kind of get my hands dirty a little bit and kind of look for that next thing.